Hello guys, good day once again. I'm glad to meet you here. In this video, I'm going to teach you how to identify an uptrend market. So there are three types of market. We have the trending market, we have the ranging market, and we have the choppy market. Okay, with the trending market, we have the uptrend and the downtrend. Okay, so this is an example of an uptrend. Let me quickly demonstrate to you. I'll do the downtrend in a separate video, but I want to quickly show you how the downtrend looks like and then the uptrend also looks like. All right, so let me pick these two here. All right, so this is an example of a downtrend. So price will start from a high, comes low, retrace a little, breaks, come low, retrace, come low, retrace, come low. Okay, so when you see price making higher lows, okay, let me create this. If you see price making higher lows, that is higher lows and lower lows, higher lows and lower lows, higher lows and lower lows. That is an example of a downtrend market. But in this video, I want to show you we are going to focus on the uptrend market. So we look at this. Okay, so you could see that in the uptrend market, price will be making what higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, in that what order. That is how an uptrend market looks like. Okay, so you see price moving in this order: higher highs, higher lows, higher highs, higher lows, higher highs and higher lows. So in each case, you realize that whenever in some aspect we can say that price, you see an impulsive move up and then a retracement, an impulsive move up and then a retracement, an impulsive move up and then a retracement, in that order. So when you see price making this movement, it means that the market is in an uptrend, and in each case the price should be able to break this high, this higher high. Okay, when price retrace and it comes down, it should be able to break the previous higher high and form a new higher high. Then it retraces, then it breaks this high. Okay, comes up, in that order. That is an example of an uptrend market. So we want to go and look at the opposite, which is the downtrend market. To look at the downtrend market, we first of all have looked at the uptrend market. So we want to look at the downtrend market. So with the downtrend market, it is just the opposite of the uptrend market. Just the opposite of the uptrend market. I demonstrated to you in the previous video. Okay, so you have price moving down. Okay, price will come down and then it will retrace, or an impulsive move was down and then price will retrace a little, an impulsive move down, price will retrace a little, an impulsive move down, price will retrace a little, an impulsive move down. So that is how a downtrend market looks like. Okay, so price will be forming what? Lower lows and higher lows, 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 in that order. Now someone will ask, why do we have lower lows and higher lows? Now the reason is, you realize that this low here is lower than, okay, it's a lower low. Okay, and then when you go up, you have lower high. Now this one here is higher, than this. Okay, but it is also lower than the previous high here. So we have lower low and higher low. Though is high, but it is lower than the previous one here. Okay, then we have lower low. The reason why it is lower low is that it is lower than this low. That is why we call it lower low. All right, so sorry, let's go back to the chart. So that is why we have the lower lows and higher lows. So that is how a downtrend market behaves. And that is how a downtrend market behaves. All right, so we shall look at the ranging market as well. We shall look at the ranging market as well. All right, so we want to look at the ranging market. So for the ranging market, you can have two horizontal lines. Let's assume we have this to be a resistance, and then we'll have this, the second one, to be a support. Okay, a resistance and then a support. So let's consider these two lines here. We have a resistance and then a support. So when it comes to ranging market, you realize that the price of whichever currency or asset you are trading will be ranging within a specific it will moving within a specific range. Okay, so price can start from here, come up here, okay, hit this resistance, come down here, hit this support, go up, hit the resistance, come down, hit support, goes up, hit resistance, come down. So when you see price moving within a specific range, okay, a specific range, it is telling you clearly that price is ranging. So it is ranging between this resistance and this support, this resistance and this support. That is what we call a ranging market. That's what we call a ranging market. I want to show you an example or practical example of what we have done, both the uptrend market, the downtrend market, and then the ranging market. So that is what we are going to look at next, practically on the charts. We want to see how this happens on the chart. All right, so let's move on. All right, so we want to look at practical example of what we have done so far. We did the uptrend market, downtrend market, and then ranging market. So let's look at the uptrend market. Now this is the Euro USD market, Euro USD market, or Euro USD currency pair. We want to use this, and the time frame we are using is 5 minutes. It is just for demonstration purpose. Okay, now whenever you are making your analysis, you know, you make your analysis on a higher time, based on a higher time frame, but this is for demonstration, so we want to use that to do the demonstration. All right, so we could see that price started from down here, okay, move up here, it moved up here, and then came down. Or better still, let me use this to make it very simple. Let's use this to make it simple. Okay, so price moved from the bottom here, came up here, okay, and then retraced a little, and then went up again, retraced to the downside, went up, okay, retraced, then went all the way up, and that was a very strong impulsive move up. Then it retraced, came down here, price came down here, okay, and it went up again, break, form a new higher high, retracement, went up, retracement. So this is a typical example of what an uptrend market. Then always in an uptrend market, the price will move from the bottom up. That is it's a bullish market. Price is moving upwards. So you can do it on and on and on until the market probably takes a different turn. Okay, so that is a typical example. Then we want to look at a downtrend market. We see a little form of downtrend market here. We just want to use this just for demonstration purpose. So let's look at this downtrend. Now you could see from here, price came down, okay, retraced. Oh, all right, so let me use this. Price came down, retraced up, came down again, retraced, lower low, higher low, in that order. This is a lower time frame, so we may not get it to be nice as we want it, okay, but as soon as you see price making this movement, you should know that price is in a downtrend, or the market is in a downtrend. That is what I want you to take note of. We can go on a higher time frame to see this for ourselves. Once again, I'll just have to change the time to a higher time frame. Let's use 4 hours time frame, and then we see. So with a 4 hours time frame, All right, we have a very good example of a downtrend market here. I can use this for demonstration purposes. Okay, so let's use this the path through. Now you see price moved from the top, okay, came all the way down here, then price retraced to form a lower low, then price retraced up here, okay, price retraced up here to form a higher low, break the previous low to form a new lower low, went up or retraced to form a higher low, price came all the way down again, break the previous low to form a new lower low, okay, went up again, higher low, in that order, okay, in that order. So that is a typical example of a downtrend market. The price will be making what series of higher lows and lower lows, or lower lows and what higher lows. So that's a typical example. Now let's move on. We could see that price, the market changed direction from this side. Okay, market change direction from this side. So this is also an example. Let's move from the bottom here. Let me close this. Let's move from the bottom here. Okay, price moved from the bottom here, went up, higher high, higher low, higher high, higher low, higher high, okay, higher low, higher high, higher low, higher high, in that order. So that is how the market will be moving. So as soon as you see market moving like that, it tells you clearly that the market is also in an uptrend, okay, in an uptrend. And then with the ranging market, let me see if we can find a ranging market. With the ranging market will be moving between a range, okay, between a range. Maybe I might not find here, but for the sake of time, I want to end here. That's how the ranging market also works, okay. So take your time, go through the charts for different currency pairs, and then you'll be able to identify market structure, what I just demonstrated to you. It is the market structure that gives you an idea of what to do in a market, whether to buy or to sell, okay. So take note of this. I'll see you in my next video. Kindly subscribe if you are new to the channel, and then turn on the notification icon so that you'll be notified whenever I upload a content.